People, hold on. Don't do your gains wrong. Welcome everybody to another episode of Savage Cash. Here with me, Suppoman, your superhero of cryptocurrency. In today's video, I hope this is very educational for you. I am going to be sharing my personal strategy as to how I have been able to achieve times 100 with cryptocurrencies in this video so that you can take this knowledge and hopefully gain times 100 plus with your cryptocurrencies moving forward. So if you want to know what my strategy is, how I do technical analysis to support this strategy, then smash up the likes, and if you haven't yet, smash that subscribe button also. So I've been listening to your feedback, and essentially you like me doing kind of technical analysis. So I'm going to show you the best of what I have learned and implemented for making huge gains with cryptocurrencies, particularly smaller cap cryptocurrencies. Now let me just make sure that I'm live and everything, because it's always a tetchy time. Yes, it looks like I am live. Let me just make sure you can hear me. Yes, you can hear me. So, before I move on to that, I'm just going to quickly talk about what's happening in the market. So, you will have noticed that essentially about 50 billion has just been ejected, apparently, from the market. So, yesterday it was at 510 billion, now it's at 463 billion, and there was a sell-off going on last night. Now, as you can see, Bitcoin is really just below 11,000. Quite not significantly below, but under enough for it to not be near 11,000. But we also see other cryptocurrencies losing value as well, and some a lot more than the rate that Bitcoin is losing value. So what that has actually allowed for is the ability to make, it's a secret sale. Which, if you're following me on Twitter, you would have seen last night that I said there's a secret sale going on where you can get cryptocurrencies at a better sat value than during the dip. Now, the dip happened around about here. And as you can see, for titanium, you can see it was 11,000 sats back here when titanium was amongst its lowest. So it went down to 74 cents. 74 cents, 11,000 sats. Now, it's higher than that even now. 83 cents, but it's only 7,000 sats, so in the late 7,000s. So actually, you could be getting cryptocurrencies at a better sat price than you would have during the dip. And if essentially sats value is your end game, then that is precisely the kind of dip you want to see. But a lot of people don't know about it because when you look on the face of it, fiat, at fiat values, it looks a lot more than during the dip. Well, it is a lot more because it hasn't dipped quite that far. But because Bitcoin is so much higher than it was back during that dip, when it was like $6,000, it's allowed people to get into their favorite cryptocurrencies, ones they wanted to get into for a while, at a lower sats value. In fact, overnight, there were about 3 buy orders that I had put in on Binance that hadn't yet hit, and I put those in during the dip. And they all went through last night. All 3 went through. So I was delighted because I got it literally on the tail end of the sats value that I had put the order for. So it went a little bit lower, but I'm okay with that. So what's really happened? Well, what's really happened is that there's been a sell-off. A mass sell-off apparently is what is being reported. And you can see that after hitting such a nice high yesterday, both the market cap and Bitcoin, there has tanked. But what I would say to you is that, where is that money going? The third most traded cryptocurrency today is Tether, ahead of Ethereum. So it just goes to show where the money is potentially going. Now, I thought that I would bring you something that I hope that you find very valuable. I am going to be sharing with you how to make times 100 plus with smaller market cap coins. Okay, so with this, it's not financial advice. Do your own research and essentially use some of the tools that I personally use and see if it benefits you in any way, because it's been immeasurably helpful to me. This time last year, I was virtually broke. Okay, I had about $3,000 in my bank account. Okay, so I had very, very little. My Udemy courses were just about picking up, but I didn't really have a lot of money. okay, it wasn't until March of 2017 that I got into cryptocurrency for the first time, made my first trade, and made, I think, a 20x, 22x gain by trading Ripple. And then I was hooked straight away. But it took a long time to get into the long-term investing mentality, because I was doing so much trading. I was trading all the time and I was losing my money, and I was making some money on some cryptocurrencies and losing probably more than I was gaining trading others, okay? And then I realized that long-term investing is by far the best strategy. And that was when I got into it and stopped the trading, and that was when money really started coming in. And now I'm in the position where I am really comfortable. I don't never need to work again, really. Never need to work again. And all this has been achieved in about 6 months. 6 months from the point that I was actually doing proper long-term investing and invested in probably the best cryptocurrency at that particular time. So I want to pass this on to you so you can, so no matter what your expertise is, you can make the same amount of gains and success. So let's quickly move on. So what are you going to learn in this session? You're going to learn the different cryptocurrency caps, how they're classified and which has the best potential, how to identify what long-term potential is and how you can identify in a coin. Then I'm going to show you when you should enter. This is personally from my from my own experience when I enter into cryptocurrency and what I look for around that cryptocurrency at the time. So it's not just simply going to be OTE, if that's what you're expecting. It's going to be a bit more, so make sure that you stay tuned. And then how to hold for 1,000 times gain. How do you make sure that you don't succumb to the FUD, you don't succumb to a bad community, you don't succumb to temptation, and that you hold? What do you do, and how do you maximize your potential of holding? Okay, so if you're liking this, smash up the likes. So let's firstly move on to coin cap types. Okay, so you'll be aware of what market cap is. Market cap is when you multiply circulating supply with coin price. Okay, so for instance, if a coin has 80 million supply, circulating supply, not total, they could have 500 million total, but if they've got 87 circulating, that is part of the sum, and you times it by the current coin price, okay? And that gives you the market cap, okay? So how they're classified is as follows. The large cap coins are 10 billion plus, okay? So that is essentially the top 5 coins. So from Bitcoin to Cardano, these are the top 5 coins. They're the large cap coins. Now I've put here that these deliver the lowest profit and the lowest loss. So what I mean really is the lowest rate of loss, because they are so big and so expensive, it's much harder for them to lose 3/4 of their value than a smaller cap coin, because they are more established, they've got a much more longer established community, they've been around a while. So, and this has institutional money, these ones, so it's much harder for them to lose money. So therefore, it's kind of the safest option for your portfolio, but delivers the less return. Then we've got the mid-cap coins. This is about $200 million and above. Now these, dependent on how close they are to the 200 million, are good for gains and losses. So what I mean by good for losses is that if it goes down, it doesn't go down too dramatically. Okay, so this essentially covers the top kind of 95 coins. Okay, so they go down quite nicely. All depends on the coin supply. Sometimes they could be very volatile if it's a small coin supply, but these tend to go down quite nicely and go up quite nicely. So they deliver good profits and not too horrendous losses. So it's medium risk. Then we've got the small cap coins. This is under $200 million. Okay, now these are arguably the riskiest coin, but if you do your due diligence and you do your research and you uncover the magic behind a coin, then this can lead to the highest reward, the highest return on investment. Could also lead to a severe burning, but that is part of the risk, I suppose, in cryptocurrency, and that's why choosing long-term coins rather than pump and dump coins that are in the small cap zone is really for you. Okay, so my personal aim when I do any cryptocurrency investing is to make at least 50 times gain. Therefore, I advocate for buying into the altcoins that are mid-cap to small cap. I don't really go in for the large cap other than to hedge my money and really have it as like a savings account, I suppose. It's kind of the trajectory is nearly always up. There are sometimes dips, as we've seen with Bitcoin, but it's nearly always up. So I really put money into large cap coins so that it just keeps going up when I'm happy to cash out my altcoin and put it into a large cap coin. But I tend to go for times 50 to times 1,000 gain with every long-term investment I make in an altcoin. Okay, so moving on from there, how do you identify what is a long-term coin? Because a lot of people, when they're looking at cryptocurrencies like on CoinMarketCap, you just look at them and you think, where do I start? What do I look for? What's my basis to go on to find a times 100 gainer? Okay, so what they all have is they have the ones that have the 100 times potential is they have a pain point. Okay, so they've got a pain point. Something exists out there that's a big pain, and nothing is out there that solves it, or what's out there to solve it is not effective enough. Okay, and normally the pain point is scalable, so it's got quite a large population of people that are affected by this particular pain point. So if you are finding a pain point that affects a small handful of people, then unless they're being charged a lot for this service, you're not going to make a lot of money out of this particular cryptocurrency. So the cryptocurrency has to offer a service that solves a pain of millions of people. And that's what the solution is. So it has the pain point and scale. A solution that covers that pain point and scale effectively is unique, ideally. So there isn't another competitor on the cryptocurrency market, and they've got a long roadmap, so they are constantly delivering value. Then the team. Team is of utmost importance. Sometimes the visions sound really ambitious. Sometimes they look unachievable. But the way to be able to achieve, or for a cryptocurrency to achieve a vision, is through team. So what I look for as the kind of priority is a superstar. So by superstar, it's somebody that's worked for a multinational company in the niche they are operating in. So if it's a payments app, if they work for, somewhere like PayPal, that would be absolutely perfect. So that is what I'd be looking for. Somebody kind of within the core team, not within the advisory team, mainly within the core team. I would look for superstars, people who've worked in that industry, are at the top of their game, and now have moved into the cryptocurrency game to help out a small business. Okay, so core team superstar, or at the very least an advisor superstar. So again, somebody who is an expert in the niche. Then I look for focus. Okay, so what is it? Is it an infrastructure cryptocurrency? Is it a payments cryptocurrency? That dictates where I look for the focus. So if they have got, 10 development staff or 10 blockchain experts, I would be looking for that for blockchain-based or infrastructure-based cryptocurrencies. If it's payments, I'm looking more for people on the payments and financial side, or on the legal side, because there's a lot of legality and regulation when it comes to payments. So I will always be looking for the team to have the right amount of focus and resource for the particular niche that they are operating in. And then I look for breadth. So I look for, a business that has everything covered. So they have got strategy, they have got finance, they have got technology, they've got sales, they've got marketing, they've got HR. They've got all of the main areas of a business, because you're investing ultimately in a small business and you want to make sure that they are as ready to go as possible. So I look for breadth and I look for size as well. So if they've got a team of 3, unless they are 3 geniuses, unless they created an entire industry and then are bringing that to cryptocurrency, then I particularly look for bigger teams. Okay, bigger teams are able to deliver on the workload, because some projects are very ambitious. Then tech. Tech is then the most fundamental. So I typically look for a minimum viable product. Okay, so they have created something you can look at, you can test, and you can see, right, where are they going? What's the starting point? And then look for speed and power. That's why a lot of people come to cryptocurrency. It's for the blockchain. It's for the magic of the blockchain and how fast transactions go through. So it's speed and it's power and it's scale. Okay, so if the technology incorporates all of that, again, it kind of depends on what cryptocurrency you go with, but certainly for infrastructure or or cryptocurrencies or platforms that require a large amount of transactions in order to be scalable, then I would be looking for speed and power. Then, how adoptable is it? How much mass market appeal does it have? How much mass adoption can they achieve? And this goes back to the kind of pain point and scale. If this is something that can bring the masses to cryptocurrency, that's the kind of thing I'm looking for. If it makes the masses kind of aware of mining, that's kind of what Electroneum was trying to do, then that has adoptability. And then integration. Can it be integrated with other systems? Whatever they're producing, can it be linked? Does it have an API or something that allows it to communicate with other systems, other blockchains? That kind of thing is magic right now, because we're looking for things over and above what's been previously done. Hence why Icon and OneChain are the most kind of hotly anticipated cryptocurrencies to be to be awaiting the market, because people are looking for this cross-chain communication cryptocurrencies, because they are kind of like the future. So integration is a big thing. Then community. Okay, so the top three are the most important, but where you look for the support is through the community. And if you've got a newly established cryptocurrency, that's not had much of a chance to develop a community. Although now, with ICOs being literally so overhyped and so oversubscribed, a lot of the Telegram groups are huger than most of the established coins. But community is where you can see the demand. It's where you can see how many people are interested. And what you can also see is the quality of the people in the community, and that's very important. It's not just quantity. So if you join a Telegram group and it has 100,000 members, for instance, that may be all fine and good, but if they are just spamming stickers of when Lambo, when Moon, and when Tesla and all that junk, instead of talking about the core features of the product and asking inquisitive questions, then you know you're in a pretty bad community. You want to be in a community of holders, quality chat, focused on the tech, focused on the team, focused on delivering value. And then you want to be seeing team interaction, whatever platform it is, whether it's on Twitter, Telegram, Discord, or Facebook, whichever. But you want to be having the team constantly communicating, so you know they're active, you know what they're doing, and you have more confidence holding. Then holder rewards. This is what most people overlook, okay? But a cryptocurrency that offers rewards for holding is much more likely to hold its value as a result. So Dash is arguably the cryptocurrency that has grown the biggest since this time last year. This time last year was about $10. It's gotten up to $1,600. One of the big reasons why is because of masternode holders, okay? Because they have bought in early, and they hold it, and they are the biggest supporters. So when the price crashes, it hits that support line, okay? So holders need to stay in order for the cryptocurrency to maintain a relatively good support. So basically some of the holder rewards can include giving free coins. So for instance, with Ethos, if you predict a cryptocurrency price in a week's time accurately, they give you free coins. Okay, dividends. So by holding a cryptocurrency so by holding a particular token or holding the cryptocurrency, you get paid dividends, whether it's weekly, monthly, yearly. Dividends really help. So does staking. So proof of stake coins. This is where you put your cryptocurrencies in a staking wallet. You run the staking wallet and it allows the network to be maintained. And so this is enabling holders. Okay, this, because you're getting free cash every time you're staking it. You get a certain amount per month or week, or however quickly the blocks are processed. And then of course masternodes is kind of like the super version of staking. So this is everything that allows you to be able to separate a not so promising looking coin from a really good looking promising coin. All right, so let me give you an example. Ethos. So Ethos is my case study here, because I want to really show you why I was able to identify this very early on as having such potential. So it started off at an incredibly small cap. Okay, so there's 75 million supply at 5 cents each. So that came out to 3.75 million market cap. So an incredibly small market cap. And in fact, ranked it, today it would be at 987 on CoinMarketCap. That just shows you literally how small a cap Ethos was at the very beginning. But what they had was a big pain. Now, being a cryptocurrency teacher, I see a lot of crypto people, newbies coming into the game, being worried about where to store their cryptocurrencies. And not only that, but being flustered by the amount of places they have to hold it. So the universal wallet was that pain point solved, okay? Because they're offering a multi-currency wallet. You can put every cryptocurrency in it rather than just Bitcoin and Ethereum, everything in it. And this is solving a huge pain in the market where people have tons and tons of wallets to have to store all their cryptos. But Ethos is providing the #1 wallet, the one where you can store everything. And also access to cryptocurrencies with fiat. That's something that is also prohibited in a lot of countries. They can't sign on to Coinbase and all that. And people were complaining at me, newbies were complaining at me and saying, Coinbase doesn't work. What can I use? To be honest, I didn't really have much of an answer. So the solution was the universal wallet and universal fiat gateway. So this means that you can buy in with any fiat currency and buy cryptocurrency, and you can hold those cryptocurrencies in one place. So it sounded absolutely perfect. Plus they had a 1-year roadmap to roll all of this out, and it just sounded like an opportunity too good to miss. Hence why I shared it with my mastermind group at the time, because I really wanted them to get behind this as well. So the team had an Ivy League CEO, the Chief Strategy and Compliance Officer from BlackRock and Merrill Lynch previously, and the CTO, this is a recent development, the CTO recently sold his company Universe to Ticketmaster. So they have got a wealth of experience in the core areas. Strategy with the ex-BlackRock, infrastructure and technical expertise with a guy who essentially created a ticketing website he sold to Ticketmaster, and a CEO with intelligence and was studying at an Ivy League university with like best credentials, really, best education. So all looked really perfect right from the beginning. So the tech is really high powered. So the universal wallet is going to be available on mobile, and that allows accessibility. Okay, and it's user friendly as well, so it looks good when you look at the actual user interface. It's got a fiat gateway. It's integratable. They've created this kind of builders API where you can create wallets on your website, and it's got that mass adoption appeal of it. The community, 13,000 Telegram users. At the beginning, there was hardly anybody, but I built the community, really. And they consist of quality holders. If you go into the Telegram, you look in, and what they say to each other is much more high quality than going into most Telegram channels, where sometimes it's toxic, sometimes it's full of FUD, sometimes it's just full of stupid memes and stuff. And the team interact constantly. And there are holder rewards as well when the platform actually comes live. So you get free you get free coins, and there's a staking element to the wallet. So this was an example of something that was incredibly small, but you could see all of the early signs of vision, pain point, great team, great technology, and a good roadmap that would enable releases of value all the way through your investment. Okay. And it offers pretty much everything that I look for in a long-term cryptocurrency. So there we are. So what's next? So when to buy? Okay, so this is the important thing, because right now we're in a position where lots of cryptocurrencies are low on sats value, and it's a great opportunity to make really savage gains. So when do you buy? Buy during panic or fear. A lot of people do the anti or do the reverse of this. So they buy when the market is vibrant, when the market is thriving, when everything's at all-time highs. People are like, I don't want to miss it. I don't want to miss it. FOMO, FOMO. And then they buy. But they should buy at the point where there's panic and there's fear. When there's panic and fear, nobody is buying. That's the time when the cryptocurrencies are dipping and you've got to go for it. So the famous quote, be greedy when others are fearful, and be fearful when others are greedy. So when to buy? ICO was when I bought Ethos, okay? Because that is kind of the lowest price point, and this is a key reason why people are constantly looking for the next best thing. But if you apply that criteria, you can find the next best thing. And if not ICO, but it is a small cap coin that's just entered from ICO, or it's a small cap coin that has a lot, that's very active, relatively new, hasn't just been left for dead, and is an optimal trade entry point, that is the time to get in. So 60% of a bull high. Okay, so when it's gone up during a bull market, when the market reclaims 60% back, at least that is the optimal time to get in. There's always dips, you know, and some people get in bigger dips than others, but the best time to get in is at 60%. So ideally, you want to get in at the optimum trade entry point, optimal trade entry point. Can't get my words out today. In terms of Sats value. Okay, so how do you work out Sats value? Because people probably don't know what are Satoshis. So Satoshi is basically Bitcoin price. And how you work that out, because you'll see that every cryptocurrency has a Satoshi price, is you take the alt price in dollars and then divide it by the Bitcoin price in dollars, and that is how you get the Satoshi value. And then if you can't get it at the ideal Sats value, then getting it at least at the OTE for dollar value or fiat value. So this whole strategy is all about anticipating the highs, not chasing the highs. Chasing the highs is what, I don't know, 70% of people do. They see everything's going up and they chase it while it's going up. When the real time to get in is when it's going down or at the very bottom, which sometimes you don't know. So you've got to keep on accumulating on the way down and on the way up. But if you get in at 60% of the Sats value they're reached, then that is a great time to get in. So anticipate the highs, don't chase the highs. So I'm now going to move on to some TA. Let's see how many people are still awake and with us. I promise not to make this last too long, but I really just want to make the point. So I'm going to use ClearPoll as an example here. So how you work it out is you use a website like Coinergy, which is charting tools. So you need to be using a range of different things at the same time. You need to be charting and using indicators sometimes. You don't need to do it all the time. Indicators and charting is mainly good for trading. But at the same time, when I get involved in a cryptocurrency, of which I've gotten involved in hundreds now, I always get involved at OTEs. And so I always do this measure when I'm about to get involved in a cryptocurrency. So I go to this one over here and I select Fibonacci retracement, and I go from the bottom point and trace it up to the top point. Okay, and then this gives me the range. Okay, so I'm getting the top of the wick because that's where the price action went up to. Okay, so then what I do is I then plot where's the 60% mark. Okay, now a lot of the time, like if I was looking at this point, then it would be higher than the 60% mark. But right now, if I just plot this across, you can see that this is significantly, the 60% mark is significantly higher than the price point it's at right now. So it's just going down, 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 and at the moment it's at around about 80% or just above that, so 82% maybe. So 82%. So if you were looking to get into ClearPoll, then up here, when people were buying it up, was the wrong time. So you can see that, you know, based from all the way down here, ever since this point onwards, people have been buying it up, and all of these people essentially bought at the wrong time because it subsequently went on to crash. Now, if you sold just before you made a loss, then that's fine, but the best time would be to buy down here during the dips. So therefore, wait for the dips. Okay, so this is the dip area, and something that I kind of do as another measure is I plot the long position. Okay, so by putting the long position, I can see how much I'm likely to make in reward versus the loss. Okay, so if I just move this across a bit, and if I move this down to the stop in the 100 line, and I've got the P&L in the right area there, so that's just, actually it's just a little bit above, so I'm going to put this up here, put that there, move this up a bit, so this is on the exact point where the price is right now, then I would be making 5.65 for every 6. So based on where this is right now, if we're looking at the number 6 as a ratio point, then you'd be making 5.65 reward versus 0.35 risk. Okay, so you can see that the risk between the low point that it is and the lowest it's been where I started tracing the price from, you can see it's only a 0.35% risk, but to get up to the top, it's a 5.65 ratio, 5.65 to 0.35, which is insane, which shows you have way more to gain than lose from this point. Okay, so that's why it's really good to get in during sats dips, because you can pick up unbelievable deals during that time. Okay, so what else I do during this time is I also look at other charting tools. So I'm just going to show you very, very quickly some of the charting tools I use. So I make sure that the price action isn't going through a certain shape at the time and leading towards going down even further. So I just quality check it by doing some simple charting. Okay, so I use tools like the wedge. Okay, so the wedge is where you can see that even if, so no matter where this price came from, if it got to this point, there's some form of support and resistance. Okay, so it's finding support over this line, and how you plot these lines is there needs to be 3 points of contact. Okay, these to be 3 points. So there's been 1, 2, 3 wicks. So you can see that is the bottom point. That's the support level, and here is the resistance level. And what you'll see is that you'll see the candlesticks essentially getting lower towards the end of the wedge. And when it reaches the crescendo, it will either go one way or another. It will either go down, which is a break down, or it'll either go up and smash through the resistance. So it'll break through the support if it's a breakdown, which means it's just going to go down, or it'll break through and break out of the resistance and therefore go up from that point. So wedging is a really good tool just to quality check if you've got the highs getting lower, the length of the candlesticks getting smaller, then you have to plot it to a point where, right, I'm going to get in and enter into this investment at the right time. And typically you want a little bit of a breakout to come before you smash that invest button or put in that buy order. Okay, what else? So there's wedging, and you've got kind of what's the word I'm looking for? That's it. You've got descending and ascending wedges. So this seems to be quite middle ground. But if it was the case that, you know, it was more like this, this would be an ascending wedge. And normally with ascending wedges, it goes down, and with descending wedges, it goes up, typically. Okay, but this is just an indicator. Okay, so moving on to the next one, we've got head and shoulders. Okay, so head and shoulders is something I look for. So you can see that the price has reached a high and then it's gone down. Okay, so at this point you're thinking, right, this is a great dipping point, so I could probably get in at this point and then the price will go up. Wrong. Typically, if you get a head and shoulders, which again is, you've got like a shoulder hits the line, you've got a head hits the line, and then you've got a shoulder hits the line. Okay, so they all make contact with the line. When you've got a head and shoulders, that typically signals a long bearish movement. So as you can see, with 10x, basically, with 10x, once it went past this head and shoulders, so this is like the neckline, I guess. Once it went past the head and shoulders, it just had a slow decline all the way down here, which is virtually an all-time low since it came out back in August. Okay, so it had a really good high, but it had this head and shoulders movement, and you'll probably hear about head and shoulders, but you have to see a shoulder, a head, and a shoulder above this neckline with the 3 points of contact, and that typically is a head and shoulder. Now, it doesn't necessarily mean every time that will happen. Doesn't mean every time, but it gives a good indication that it's likely. And as you can see in this case, it was certainly likely. And then we, like wedging, we've got triangles. Okay, so that is when the points of the trend line meet. I'm sure you can see it. Essentially, you've got the 3 points of contact at the least to make a trend line, another 3 points of contact, and then they come together. And as you can see, it came together here, and then from that point, it just exploded. It just exploded. So, so app coins went up from this point. Now, subsequently, it's gone right down and it's going up again, but it's reached that support line. So you can see that here. So this could almost continue. If you're getting into this late, this could continue and move across here. Whoops. So you can move this trend line up here. So for a short-term trade, that really worked. But for a long-term, you're seeing that although a breakout happened, it's now finding another resistance mark, and you can move these across. So you can see what's happening, and you can plot another resistance and support line. So the support line's here, resistance line's here. It's going up now. Is it going to break through? Then that is another resistance line broken, and it's going to go up. So those are some of the charting tools that you can use, and of course I've taken you through some of the indicators. So you can use Bollinger Bands, you can use MACDs, you can use the simple moving average, you can use RSI. Those are the main ones that I use. And if you want to know more about them, if I didn't teach you enough, then in my trading course you learn all about these and candlesticks and everything. So this is how you make sure you're getting in at the right point. And another thing I showed you the other day was using MACDs to spot W's and M's. Make sure that if you're about to buy into something, that a bullish movement's coming, so a W is forming. And then when that W hits the line, so if you haven't yet seen that, I will try and show you it right now. So we get the indicators, and we got the ye old MACD. And we plot a MACD. So as you can see here, there's not been any recent. So here you can see an M. So hit the M, and then it was down for a while. So typically, I would look for a W. So you can see a small W. You can see the curve forming there, and then another curve before it goes up. Okay, so but it didn't really make a W, as you can see. So as you can see, it was a very minor going up. But you really want to see a major W, okay? Also with the MACDs, when you can see that the blue line is dominant, that means that it's a bullish movement. And all this coming at once, didn't even plan it. And if the red line is dominant, then it's a bearish movement. So you can see here that the red has started to overtake the blue, and so it's a bearish movement that the price movement is currently making. Okay, so there's a few things that you can do just to quality check you're getting in at the right time. It's not simply a case of just seeing, right, you're at 60% mark and that's the time to get in. No, because as we saw, for instance, with 10x, you know, with this head and shoulders thing, then it could actually lead to a much bigger bear movement. Okay, so you've just got to quality check it with some other charting tools. And these are really the simplest. Okay, it's so super simple. You can find these, you can see them forming. You know, you can just, all you'll need to see is a hump, a big hump, and another hump, and there you've got it. Okay, and then you just literally, you know, get one of these lines, trend line, and then you just literally plot it from there to there and make sure that there are points of contact. Okay, and that's how you do it. That's how you do it. So, masterclass there. Masterclass. So, let's finish off. So, now I've gone through the when to buy. How do you hold? Okay, what is the holding process? How do you stop yourself being one of those people that sells when everybody else is selling? Which is the wrong way to go about it. You keep while everybody's selling, and then you sell when everybody is buying. That's what you do. So, anyway, so how do you hold? So, firstly, would you join the community? Okay, that's what helps you be more of a holder, is by actually being within a community of people that are all going for the same goal or all want the same thing. It's a little bit like going to Weight Watchers or Slimming World or whatever, you know, whatever those clubs are called. But you go to these clubs and everybody's going for a certain goal. So there's some camaraderie. You are more incentivized to keep it. And also these people in the community are the ones that are telling everybody else about it and saying, this is what's great about it. This is why, you know, you may want to invest in it. And that is what helps a community grow and what helps a cryptocurrency grow. So would you join the community? Will you hold at the first sign of trouble? Okay, so typically when you have what's happened literally in the last month, which is a massive bear market, you know, can you hold through that? If you can hold through it, that really tests your resilience. I've held through so many corrections and bear markets that I'm now immune to it. And I am not easily scared off. Hence why I can come online and I can say, yeah, the price has gone down, the market cap's gone down, and still be upbeat. Because I hold through trouble, because that always makes my investments thrive once the bulls return, which they always do. Can you realistically hold for 50 to 1,000 times gain. If you can't, you've got to ask yourself this before you make the trade. If you can, if you're convinced enough by its long-term potential, then you can hold and you're more likely to hold. But you need to ask yourself that question. You can't just make the investment, go away, do your normal things and be thinking, should I have done that? Should I have done that? You've got to ask yourself, can I hold through the tough times to the gains? Do you think it should be much higher priced than it is when you buy it? Do you look at it and think, wow, that's undervalued. That's only 20 million market cap. That's so, it's got the opportunity, it's got all the appearance and attributes to make a billion or multiple billion market cap. So yes, it's definitely a lot higher price. It's a lot lower price than it should be. If you think that, again, then you know there's a lot of space for your investment to grow. And is it undervalued versus competitors and the pain point? Okay, so sometimes you have competitors, sometimes you don't. When I look at infrastructure cryptocurrencies, I tend to assess them against the infrastructure ones that exist now, like Ethereum, Neo, Cardano, EOS. And I'll look and see the market cap, the entry point for the cryptocurrency I'm interested in, and see how many times gain there is to make. And if it's undervalued, then, and by a lot, you can see the potential for gains. Okay, there's a lot of 100x cryptocurrencies out there with real solid potential for gains. Credits is one. There's a few others. My number one cryptocurrency is, and I see that there is huge potential for gains with a lot of cryptocurrencies when you look at them versus their competitors. And the pain point. When I looked at Ethos, there was no one else that was a competitor. Didn't have bread, didn't have pillar. Okay, it was just Ethos on its own. And what I looked at was the pain, the scalability of that pain, and how many people would love to be invested in something very similar, like Coinbase. Coinbase is quite similar to Ethos, but much, much worse. And I thought if people were going to be investing in Coinbase, surely that would be worth billions now if it was a tradable cryptocurrency. Hence why I saw a lot of potential in Ethos. So if your answer is yes to all of these, you've got a much bigger chance of holding. So print this out, take notes or whatever, and use this before you make your next investment, and it will it'll signal to you, can you hold through the tough times? So that is it. Now another thing is cashing out. Now that's not something I'm covering today because this is personal preference and not something I want to personally let you know about. But in previous investments, I cash out at over times 100. So with so what I would tend to do is I would think, right, this has hit a good high point, cash out a little bit. Okay, and then you keep on kind of take small profits every now and again. Nothing huge. You don't cash out 50%. You don't cash out 30%. You cash out maybe 10% or 15%. You know, every kind of 100% you go up, but leave enough for the 1,000 times gain. Leave enough because over time the cryptocurrencies are going to grow. They are going to reach massive multipliers over years. And that is what you've got to have enough in there for. But by taking out profits all the time, you're making sure, and particularly into the large cap coins, that means that you are keeping, to an extent, your money safe. Now, Bitcoin was certainly not safe when it came to the big crash, but it tends to go up a lot quicker than the rest and has that brand appeal that means it will always grow. Whereas other coins, or even the altcoin that you're in, sometimes by holding, you know, you're stopping your ability to be making gradual profits down the line, which can be reinvested into another times 100 coin. That's certainly what I've been doing. So that is it. So I wonder what you guys thought of that. So I'm just going to have a quick look because I've got to go very shortly. But I'm just wondering what you guys are thinking and what you guys are saying. By the way, guys, remember to smash up the likes. O-chain or zero chain. I am looking at that actually. And I will look to be having some form of review eventually. Thank you, Wendy. I appreciate that. I am titanium. I should have sung that, shouldn't I? Shouldn't have sung People Hold On. I was waiting for a bloody tune. Axe buyer Roger Ver is an advisor. Don't know if that's particularly good, but that is a very small market cap. Legolas looks promising. Legolas does look promising, but I haven't looked at it in great detail because I prefer the look of Blockport on the face of it. Dent. Yeah, Dent has been doing really well. People are suddenly beginning to realise, unless it's gone down a little bit, people are suddenly beginning to realise a little bit of the power behind Dent. I said the other day, if you can get it below 2.5 cents, that's the best. But I think it could be making moves soon. Millicoin. Maybe one day. Vote Dent on Binance. Hold on a minute. People, hold on. What is it? Vote HTML. There is a vote going on at the moment. The community coin of the month. Yes, 6th session. Dent is winning. Wow, Dent is really flying. Excellent. They really are going for it. So if you want to know more about Dent, I did a Savage review on that not long ago, actually, and I do think that's got a lot of promise. If that gets onto Binance, wow. But they tend to take on the top 3 or 4, so, you know, at the moment, I haven't really looked too much into Elastos, but Medical Chain you obviously know I've looked into, and I think is really promising. WePower is actually in the lead. I thought this was in order. It's not in order. So, the Dent is in 2nd, WePower is in 1st. Never know, WePower may get up there. And then Zilliqa looks to be in, is it in 3rd? Yeah, so we've got WePower, Dent, Zilliqa, then Elastos. Medical Chain appears to be in contention, but not doing so well. So, disappointing. So if you're into Medical Chain, if you want to see the WAN chain for the medical system, then smash a vote for Medical Chain. Anyway, that's it, peeps, I think. I think that's it. Hold on for one more day. I've sung that one already. I thought I can't do it again. Oh, by the way, what's it called? Debitum Network really smashed it yesterday. I don't know if it's still in the I am Debitum. I don't know where Debitum is if they're still in 5% bonus. I've gone past 5% bonus. Shit, look at that. It's really gone for it. Clearpole. Well, I just showed you Clearpole. Massively low priced at the moment. Great info, thank you. Glad to hear it. Hope you enjoyed. Have a little patience. Yes, that's brilliant. Right, that's it. Thank you, Ikera. I appreciate you saying that I rock. Yes. So there we are, peeps. That's it. So, I hope that you've joined the Titanium community. Because Titanium community are awesome. I love them. Right, I'm off, peeps. Hope that was helpful for you. And I hope that you've learned something massively in that. Because this is all the stuff that I use. Pretty much all the stuff that I use to be successful with cryptocurrency investing. And I have been very successful. It's been very odd. But it actually worked. The first time ever, something I actually did really well. After I had a shite apps business, a shite website business. You know, everything seemed to never work, and then all of a sudden gets cryptocurrency right, winning at life. So I just want, it's so easy. I'm just an ordinary person. You may look at me and think, oh, you know, oh, he's so successful, he's so smart. But the fact is, I'm just an ordinary person, a very normal, ordinary person that's been extremely lucky and skillful to an extent, but also, you know, the timing was excellent. So, you know, but it's still early. It's still time, peeps, and ordinary people can get rich, and that's the magic of cryptocurrency. And that's why I love it. That's why I love it. Anyway, peeps, thank you very much for joining me today. I hope you enjoyed. I hope it was useful. I hope it's given you some tools to be able to implement for yourself, and I will see you next time. It is lights out, all out.